Alvin, welcome. All right. How much time we got till the market opens? 19 minutes. I'll wait till this thing cycles up a little bit, till TikTok cycles up a little bit to a number of simultaneous users watching. No, but I got some. Let's look. It's at 14. I'm up 79%. Well, actually, it pulled back a little bit. It's now to 1240. So I'm at 71%. Yeah, you got some. You're good. You're in good shape. Does this make my face look bad? Let's see. That's too bright. Okay, we'll keep it like this. All right. Marcus Mark. Carl, hey, buddy. All right. In at 10. Okay, cool. You know, you need to, well, nothing. That's good job. All right. At 14, that's almost double my entry price. 7.26 at 14.52. I'm doubled on that, but no big deal. I still plan on holding, but I'll probably take out another 10% at that point. You want more? Yeah, me too, but it's too late. Like, I always remember that because it's easy to fuck things up like that. Remember that whatever you got when you got it, that's what you got. And once it's gone and going, it's now taking profits or managing the holding and the position. Adding will come with patience over time. You'll find there will be some spot where it'll start to speak to you. Yeah, the train left the station, but eventually it will slow down to pick up some more customers. And it'll be up to you to decide whether or not you want to add there or back at home, back when it comes back home. So anyway, Nvidia is up. I do believe because of the Elon Musk, yes, XAI supercomputer that he's building with Dell, Hewlett Packard, and I guess with some help from Nvidia. I think it's because Dell's using Nvidia in their servers, but I think his contract is going to be with only Texas-based companies, and that will be Dell primarily. So I think the real investment opportunity, the real trade opportunity on this hype is Dell. And I think that's, incredible opportunity. I mean, basically Dell, which hasn't had anything to say about AI, is now suddenly going to be, Elon Musk's leading contender, leading company for imploring. I mean, the Dell servers are right there in Round Rock. They're about 25-minute drive from the Tesla factory and headquarters. And of course, SpaceX is off in the south of, it's about 7-hour drive, but he flies. But anyway, it's just a hop, skip, and a jump. So I imagine that Elon Musk, fed up with the Delaware thing and New York and just all that, and just really embracing Texas, is going to want to uh, trust Dell with its needs here more than anyone else. So that is my, what is it? My opinion, my theory. That's my theory. I think I'm right. And so I think the real opportunity here is on Dell. And by the way, like, yes, I think it was Tuesday that I said that Dell is triggering a U gap fill breakout entry. So for those of you that listened, that would have been at 149. It's now in pre-market at the high of Tuesday, which is 155 almost. It hit 156 in pre-market. So I think Dell, it's already kind of halfway going, but I think the ADR, the range on the day today is going to be unprecedented. I could be wrong about that, but I'm going to go for it. So I'll get some here, but my idea is similar to NNE and similar to, the way we invest or trade, is my idea is to accumulate on pullbacks on any kind of big play like this. So yeah, I'll be trying to get some Dell at the open. I'll probably go with a PCS, but maybe I'll mix it. Maybe I'll mix it with some shares. I'll put credit spread. You thought Musk was going with Oracle. Oracle is also in Texas, based in Texas. So let's take a look at them. Let's see what kind of change they've got. Only 1% change pre-market. So it's pretty strongly Dell. But Oracle's headquarters are even closer. That's true, even closer to Tesla. But it seems that I don't know, Dell, maybe Michael Dell talked him into it, whatever. It seems like the hype is a little bit more energized at Dell, but I have not read every report like you have. Okay, so but that's enough for me on Dell. And Dell likes to move. Dell did 8% ADR recently. Oracle did a 2% ADR. So Dell moving 4 times faster than Oracle. And I think that'll always be the case. It's just that's just how it trades, dependent on the float and the earnings and everything. And that's just how it moves. So, there's going to be multiple companies. You want to grab the whole basket, go for it. But I'll be on Dell. I'll be like a white rice. I'll be the white. What do they say? I'll be like white on rice. I'll be like something like that on Dell. So anyway, that's Dell's situation this morning. I love it. I'm going to put it on the 8-up display right down here so I don't forget about it, that I want it. Let's see. Now, hot and pre-market in the penny stocks, if there's anything to day trade, so, we want to know. I don't think there is, but let's see. SMX. No, it's just completely fading every move. PRST. Presto Automation. That's interesting. I wonder what they do. Like, I could use automation. What do they do? Anyway, these spikes are very difficult and do not hold. 13.1 million on CYN shares this morning traded. Nah, that's even bar coding. That's not looking good. And then finally NXL, and usually the finally ones are just not worth it. Yeah, and that's all fading. So great. That just clears our plate a little bit. No penny stocks. And then we got Beely up a little bit. It's a $6 billion company. We're a $6 billion, at least this the way these shares trade. It is up 9% this morning. It does not look like it's due to ER. Probably something to do with China. So that's Beely. And then we've got PSNY at $1.6 billion company. I know, I must have mistyped that. Which one is it? Yeah, PSNY. Well, whatever. That's not looking that great. Up 5% this morning is WRK, Cincinnati. WRK is, yeah, up 5%, but not on a lot of volume. And why? It's not ER either. Merger. It's a merger. So never mind. Mergers prices get pegged and there's no trade there. WRK, that's a $13 billion company. GFI. Hey, good morning, Sergio. GFI Gold Fields Limited. It's generally in the daily sideways. So even though it's up this morning, I'm not interested. That's GFI. And the last possible one. Nope, no, not even that. That's a holding company. So that's pretty much it this morning. And of course, NVIDIA, which at this incredibly extended point, you should already be in. You can't really be buying up here on extension and gap open at that. Uh, it's just too risky. It doesn't matter if you think it's going to go up, and it could go up. You can't practice. It's just not good rules for trading. Always wait for that pullback. Cheat entry is the best, or a reclaim entry. What did you ask me? Yeah, WKRP Cincinnati. Yes, sir. It was WRKP Cincinnati. Yeah. Let's see here. I'm in a ton of names. I think I'm probably in 40 positions, to varying degrees, whether some of them might even be short. Others might be via shares position. Others might be long via an options spread. And I even have a couple of iron condors. And then I've got, of course, nano nuclear energy, which am I pumping it? Yeah, I am, because I'm fucking pumped about the company. I don't really care to pump a stock in order to sell into it. It's just I'm pumped and hyped about it and hope everybody comes on board. Not to push up price, that would be a wonderful byproduct. But yeah, I'm pumping it as a company, and I have a position. Yes, NNE. So Nano Nuclear Energy, they've just IPO'd, and they make portable mobile nuclear power reactors. And it's at the size of, he's back. Yes, Bill, thank you. They fit it into the size of a shipping container, which fits right on the back of a semi truck. And so you can just pull a semi truck up to a concert venue or a small city and power the entire city on nuclear energy. I have a feeling these are just going to be selling like hotcakes, and their problem is really going to be that there's going to be so much demand for what they offer. I think it's an outstanding idea. Nano nuclear energy, NNE, and they are fucking hot as a stock. I mean, they were $3 at one point, just like a month ago. Now they're all the way to $14. They hit in pre-market, so it's up hundreds and hundreds of percent from the low there after IPOing. Just really cool. Do your own due diligence, check it out. But I am accumulating. I've already got my first set of position that I've taken 10% profits on the pops here. Whenever it drops or even goes below my cost basis, I'll DCA, I'll average in. And then if it gets too low, if it starts breaking points, or if the fundamental analysis not there, or some bad information comes out, of course I'll cut it, but with the intention to keep it on watch, because I really like this company, its vision, its idea. It's just, do your own due diligence. Let's make sure that it's a real goddamn company. Because we all remember, was it Fisker? And it's one of these companies that had hydrogen powered semi trucks, and turned out to be, wow, I mean, somewhat fraudulent in how they were saying they were as far as progress with their products. But they did, in fact, they were, in fact, building something. However, they were a little bit more fraudulent. The CEO was just, I don't know, too excited to share things in a way that wasn't honest enough. And they had, for example, done a prototype commercial, a prototype video of the hydrogen powered truck going down a hill. Turned out it wasn't even on. It just was for the video, to make a clip, to make a video clip. But then, it just got destroyed for being dishonest. Yeah, it rolled down the hill. It wasn't on hydrogen power, but it does work. It just, for that clip, they did that. So anyway, it got destroyed. It got hammered. That guy, I think, maybe is up for trial or got prison time. So that's what you do for being dishonest. So, NNE, watch your butts, watch your back. You never know with any of these companies. You never know with any of these companies, guys. Okay, you never know. But it's not like something necessarily that we're investing in, although in some way that's part of the investment thesis. but it could also easily be traded, you know? And with trading, you just sell when you're ready at any time. There's no problem taking profits. I made a post today. Exiting while you're up equals gains, right? Number one. So let's just put this together logically. Exiting while up equals gains. Gains, right? Gains are gains. Not everything has to be confirmed that you got out at the right time or top ticked. Exiting while up equals gains. Gains themselves sequentially can be compounded. Gains can be compounded. So these are truths. So follow the logic here. So all you need to compound gains are gains, sequential gains. My monitors are about to turn off, but follow my logic on this. Um, so therefore, it's never wrong to exit with gains. It's never wrong. So if it's always right to exit with gains, then you can simply exit at any time with gains and you did good, right? So it's just logical. You can compound gains, but if you mess that up, it's all about probabilities. If you keep trying to go for maximum, how many times do you think you'll hit maximum? Not all the time. And so therefore your win rate goes way down. Well, how are you going to be able to compound gains if your win rate is going way down? So it's better to exit when you're up with certainty than it is to try to get more. Because if you can compound gains, your account will keep growing. And that's why scalpers do so well. But for that, you need to be very experienced. You need to have a high frequency trading setup. It costs a lot of money every month and a lot to set up, and takes at least a year of day in, day out, if not multiple years, training to get the hang of the risks of scalping. This is why I always recommend people start with a prop account, a funded account. Because like for 35 bucks, if you can get yourself qualified, then you can get yourself $100,000 account. And then you can trade with that. And if you blow up, you lost 35 bucks. If you make money, you get 90% of your payout. If you make thousands of dollars, you get 90% and just keep going with that. Hey, if you're a profitable trader, you're making money with a prop account. I've got one that I recommend in my links. Click the link in my bio if that's something that you're interested in. That's a great way to not risk real money. You're risking some money to evaluate to pass your trial to see if you can become a funded trader. But after that point, if you've got it, then you've got it, and you can give it a try and see what happens. That's better than taking $1,000 of your own money and trying to make some decent money with it and just blowing it all, which is what's going to happen, by the way. 100% of traders that begin lose 100% of their money in 100 days. That's my new expression because the actual fact is 90, 90, 90. But if you've lost 90% of your money, you've lost all your money. So we might as well just call it that. All right, the market's opening in 20 seconds. Let's go. So we got Dell, we got the market. The market is very extended and being run by AI. It's being run up by all the AI prospect out there. Let's see how it can continue. But I'm all over Dell like white on rice. Looks like I just got an exit on something. What was that? Was it SMCI? Yeah, I got an exit on SMCI. Also just exited some on Mara. Those are some of my positions. I will look to see if I have some more partial contracts on any of these. But yeah, SMCI is really elevated, opening elevated. This is another good reason, Randy, why Randy is one of our best followers of our income system using option spreads, and he follows the rules so diligently. And one of them is to preset 50% take profits on all of your orders, on all of your option spreads orders. And this is one of the reasons why it can be good is because sometimes you can have a market day where everything opens really elevated and all it does is sell off from there because everyone's taking profits. Well, you too, you have those orders already set. And if they hit that point, it's autopilot. You got your exit. Okay, looks like that was the last contract I had on SMCI, so now I can move that to my closed folder. The other one was Mara. Let's take a look at that. But it looks like Bitcoin is down, so Mara being up is just kind of crazy. But that's the way things want to go with Mara. Great, happy. That's fine. Now Mara, it looks like yes, I have 8 more contracts. Okay, great, and I'm already at. Well, it's only at 41% max profit right now, so I got a 50% exit. So that just goes to show, and there's 47% now. That just goes to show how good it can be to diligently have those 50% max profit orders in. Way to go, Randy. Rainer, how you doing, buddy? You breakout, yes, sir. On what? On what I was talking about on nano nuclear energy? Yeah. All right, let's take a look at Dell. If Dell's pulling back, that's great. I'm just gonna let it. Let's just let everything on the market just pull back. That's fine. Don't ever buy red. Never buy red because you don't know how far red's gonna go. Buy green. At least if you're buying green, even if it doesn't go that way by the end of the market or by the next day, at least you were buying when it was going up and had some prospect of going up because it's going up. So don't ever buy a red day. You need to be buying green. There's obviously some rare exceptions to that, but until you know what those exceptions are, follow that concept. Don't ever buy a day that's red. And by that I mean from the open, not from the prior day. It'll show green on like what's called fucking CNBC, or not MSNBC, CNBC. Okay, forget about MSNBC, please, forever. But CNBC will show a stock as being up, even if it's moving down on the day, because the figures they show are from the prior day's close. So a stock can open up, gapped up. So like Nvidia today, look, it says right here, it's up in green, up 3% today. And yet all it's doing for the moment is sliding and red. It's red on the day. You get in and you start losing money. So as a trader, we don't like that. So it's very important to be sensitive to direction from open. That's just more important to us because we need current direction. We don't need any smoke blown up our ass. So don't be trusting CNBC, certainly for much of anything except for the news, the stories, the the reports. But for uh, opinion, yeah, no, don't do that. Bad idea. All right, so now I can see that we are mostly 75% red off of the open with our hundreds of stock picks that are high opportunity picks. So that means that the market's mostly under pressure today. And at the moment, and that can turn around all of a sudden, everything's green. But that really means that at the moment, it's going to take some, you know, unsurmountable amount of demand in order to push things around. And I don't think that's going to happen with the kind of soft housing numbers that came in today. And the job numbers were just about in line. There was no wonderful surprise. Um, and so it's Thursday also. It ain't Monday. Like it felt like Monday because of that break there. But it's Thursday and tomorrow's Friday and that's the end. And Friday and Thursday and Monday and Tuesday are weak volume days. WEAK. And Wednesday is always the strongest day. And yesterday we cut that where we didn't get a trading day. So Thursday and Friday are going to wane in volume, likely, with very rare exception. So Nvidia is kind of holding with a little bit sideways, a little bit down off of the open. Let's look at Dell. Dell is moving up. Dell's at 158. So I'm going to start to look at the because the market's sliding and the market is red. I'm going to start to look at Dell's option chain. You can't really see that, you guys, on TikTok, or I'm not really sharing that on my screen over there on anywhere. But I can. All right, I will then. Fine. Okay, so let me just get it nicely positioned though. Up the option chain for you guys. Okay, so here we have the 57 day to expiration one, which is between our sweet spot, which is 30 to 60. The options we would be looking to sell are between 30 and 60 days uh, to expiration. And we're looking for the 20 deltas. So that's right here at 135. And we'll take a look at where that is on the chart in just 1 second, but we would sell that one and then buy the further one out, 130 put. So these are puts. We sell the 135 put and the 130, and that's a long position. And it looks like it's offering about 27% return on capital in that time. So that's outstanding. And here I am I'm getting the trade right now. I got to confirm that off screen for security purposes. I don't need my account numbers and stuff, which are front and center visible, going out to anonymously. No, thank you. All right, sending that order in, and I might have to adjust it. Let's see how it's sitting. Yeah, it's coming down to about 25.5 ROC, return on capital. And I've even competed to get it down to about 24.8%, and I'm having to chase it. Oh, okay, now it's way, way, way down and nowhere near the right price. So the bids and the asks on those options were inefficiently priced, or what could have happened is while I wasn't looking, Dell just spiked. Let's see. It kind of did. I don't think that was the full story of what just happened. I will go back and look at the chain. Oh, we're back up to 25% ROC now at 95, 97 cents for the option spread. Dell long, but we're going long with a put credit spread myself. That's just the smarter, more masterful way to take a long swing trade, not investment, trade. Although I wouldn't mind sprinkling some Dell shares into my port. I said the 57 day to expiration one. That's all I said. What it is the August 16th. But Carl, you make that decision on your own. You don't really need to copycat me, otherwise you don't know what the fuck you're doing. You need to be able to go like, oh, I'm gonna get the August 16. You should get to the point where you go, I don't give a fuck what Evan says. I'm getting this. You should know what you're doing so much so that you go after it. I'm not singling you out, Carl. I'm just saying that's where people should be with this techniques. I still am not getting my fill. Yeah, you might even take other strikes. See, exactly. And then I got to look at that as well because here we have the 140, 135 now at 22 delta, and that's not too bad. And actually, it has a better return. So I'm going to go try and get those right now. Good job, Carl. That's what I'm talking about. Now I'm proud of you. That's offering 33% ROC. That's outstanding. I'm going to get 5 of those. Let's go. Send the order in. Nope. Yes, I got that fill. Yee. Okay, I'm in for several thousands of dollars position on that as a put credit spread. Put that into my bullish pile, and there you go. That's how it works. Now we hold that for about 25 days roughly. If you're a member of our group, you know what to do. Make sure if you're not and you want to come on in, then make sure you click the links in my bio or whatever. I don't know if that reduces when I say that. I don't know if that reduces the live stream, but fuck TikTok if it does. You know, God, it's just that's not fair because I have links in my bio. What if it's like me giving away money? Come on, that's not fair. Oh yeah, so Dell's really moving, and I'm really happy I was able to get that 33% return on capital spread on Dell, which was the adjusted one, based on what Carl had said. I think it was the 140, 135. So let's go mark that up on the chart so we know what we're getting into and can follow along for the next month. So we bought right here. We bought the August 16. So we go to August 16 and we bought the 140, 135 for $1.25. So the break even will be 138.75. So we mark that up on the chart. assign it a put credit spread line break even. Just that's something I have in my thing here. And so long as price can be above and in the above area, then we'll be at accelerated profits and profiting. Hey, thanks for sharing the live, Ace. I appreciate it. Hopefully someone comes in. I mean, if you know people, but I appreciate it. So that's it. I'm glad to be in Dell, and Dell is running. And let's see how that entry is going. But usually on the first day, yeah, I'm right at split at right where I got it at. So that's fine. I'd rather have that than some strange bid ask inefficiency. Is it still back there? Let me see. Yeah. So like another thing to look at here is the open interest. The open interest on the 140 strike is 935 contracts. That's good. Thousands are good. The open interest on the 135 was 1600. Amazingly, the open interest on the 115 puts is 12,000. So what's going on there? So somebody knows some bad news is coming on Dell or something, and they bought, like 10,000 August 16 out of the money puts on Dell on the 115 for August 16. So what's up with that? And I'm not seeing a matching neighbored strike. So that's not even a spread. That's flat out vanilla. They're losing money every day to theta decay for being wrong. So hey, but you never know. There's rich dudes out there. You never know. All right, so that's Dell. We finally got our position we were aiming for, which was Dell this morning. How about Nvidia? And I really like the Dell thesis here. That's me. Okay, like you can do your own due diligence, but me, I'm pumped about the Dell Elon Musk symbiosis. You can be pumped about Oracle or Nvidia or Hewlett Packard symbiosis all you want, but I live there in Texas. I know that factory. I know Michael Dell, the CEO. I know Dell. I know what all those companies can offer Elon, and I know Elon. I don't know these people personally, but I know these people because I follow them, and it's my take. It's not really a hot take, but it's my take that Dell is going to be the biggest winner of what's going on, and that Musk is going to entrust Dell most highly outside of his own. If he's outsourcing this, which it looks like he is, I think Dell's going to be at the pinnacle of how this goes through. And Nvidia is sideways on the news. So and Dell's way up. What can you do? Alrighty, I'm up a fuck load on other stuff. Let's take a look. For some reason, although Bitcoin's not really up, Mara is up, and MSTR, another one that I'm in, is doing well on the put credit spreads. So it's just the amazing thing about put credit spreads is I got into MSTR at 1680. Okay, 1680 about a month ago. Maybe it was 3 weeks ago. 1680. Keep that number in mind. 1680. Right. Price is now down to 1500. That's what it's at right now. 1500 even. 1500. I got it at 1680 long. But because I got a put credit spread, if you had gotten shares, I'd be down $180 per share. But it's because I got a put credit spread, I have the theta decay working in my favor, and I have a beneficial angled break even line. So that's the beauty of my system and the put credit spread trading system. And I am up 15% to max profit on MSTR, which is, and the max profit was something like 25% ROC. So if I'm up 15% to 25% return on capital, that's like you divide it by 6 roughly, it's like 8%. I'm up 8% on my position. I'm up 8% on my capital on something that's down, right? So it was at 1680, 1500 divided by 1680 is 89% of the original. So in other words, it's down 11%. one minus 10.7%. It's down. The stock is down 10.7% from my entry, but I'm up 8% on my capital. And that's only going to continue as time goes by with my descending break even line based on the put credit spread. That's, it's like, it's how can I talk people, into that? But it does take time to learn. So make sure click the link in my bio, come into our group, talk with me, stay in my ecosphere, ask me questions. Happy to help you learn how to do that. But that is way better than shares trading, in my opinion, and in my experience. Alrighty, everybody. It is now 9:46 a.m. We're 16 minutes after the open, and the good news is we're about 60% green off of the open on all of our opportunities. So the market is turning around a little here, and it's on breadth. In other words, it's coming from everyone. It's not just a couple of things pushing things around. The Dow, however, my goodness, the Dow is really moving. That could be somewhat inflationary. And I noticed that oil is up this morning as well to $81 plus a barrel. So that's up. But yes, the market is now moving up on this extended gap open, which is phenomenal. This could become a dot-com bubble boom, just like in the year 2000, 1999 to 2000. And the AI, boom just continues. And it can be somewhat irrational, because everybody back then who was getting in a .com on their business, whether it was PetSmart or whatever, all of a sudden their stock went up thousands of percent. It was insane. If you didn't live through it, it was probably the most insane bubble that there's ever been. And that was because technology and the efficiency of trading and the efficiency of markets had been increasing. Well, guess what? 24 years later, and the markets are even more efficient and more leverageable, and there's more people on it and sharper. And we could have a boom at some point in the future, a bubble boom run, even greater than the dot com. But it does mean that when it's over, good God, shit hits the fan. For example, world record trader Dan Zanger from 1999 to 2000 turned $11,775 into $18 million in 18 months because the run was that extreme. And he went on record to say he was pretty stupid. He was full leveraged on some positions, leveraged margin, fully margined, 100% concentration on single positions at times. Um, and what you need to know is he then proceeded to give 60% back over the next bear market as the whole thing busted. So if you're inexperienced and you hear things like, wow, you can make a shitload of money. Oh my God. Um, that just was timing. It just was good timing. He would have lost his ass. And he had been trading for 20 years prior to that and did lose his ass many times. He just got to an experience level where he was like, hey, this is worth another shot. And he gave it a shot and he had the experience to get it to go from $12,000 to 18 million in a year and a half. And then he didn't have the experience still. He still didn't have the experience to not give back 60%. But hey, if the timing is right, yeah, you can be left with a lot of money, but the timing is something that you can't dictate. So those practices are dangerous, deadly, and you'll probably lose all your money. But you just never know. I mean, we could be seeing another AI ignited bubble bull market run going on. And then even if that gets corrected and it takes a year or two, to deflate and bust, but it might not because rates will be coming down and the economy is improving. Um, but even if it does, with these huge run ups, where it busts back down to is typically higher than where it started. Learn to trade, get experience, show up every day. That's what I do. There's going to be opportunity out there everywhere. Me putting money into Dell right now, it's as small as it was, it's a small part of my portfolio, a very small part, a micron. But putting money into Dell, I mean, that's what you got to do. You got to identify Like, I was watching some clips from Frequency. Has anyone ever seen that movie Frequency with Dennis Quaid and Jim Caviezel, I believe his name is? Super great movie. Sort of about it's kind of a time travel drama, kind of like Field of Dreams mixed with an action suspense thriller where the device for the action is time travel and there is no time travel. You'd have to see it. It's pretty amazing. And anyway, what was I saying? Oh, uh, one of the guys in the future tells one of the guys in the past that he's Santa Claus when he's a kid. It's his friend when he was a kid, and he tells him, "This is Santa Claus, and I want you to remember this one word, and you're going to want to do something about it in your life at some point." And he says, "Remember this word, Yahoo." So at the end of the movie, they show this guy with this, the highest end Mercedes Benz, and on his license plate it says one Yahoo. He was like the first guy to buy first shares on Yahoo IPO day. Obviously, he made a shitload of money, but that's what could happen with Dell. That's what could happen with nano nuclear energy. That's what could happen with all these companies. But you never know. You never know. So, you always hear these stories about the guy, but it's just like hearing stories about lottery winners. Not that it's that random or luck based, but it's somewhere in between. It's somewhere in between gambling and skill. It's better than being a professional gambler as far as the market goes, because professional gamblers are exploiting like um, what they call edges, but they're really like secret broken aspects of the system. That's not how you have to make money on the stock market. But for example, one time at a birthday party at Chuck E. Cheese or something, one of those things, I went up to the things where you roll the ball and it goes into the circles and you get different points, right? And I noticed that one of those machines, the upper left like 100 point hole, had a rip in the leather, and so it was a little bit flared open, another centimeter around the rim. I got another centimeter of area, right? So what I did is I focused on that one unit and that one hole. And as I even was trying for it, I got better as a skill at getting it in that hole. And pretty soon I was getting it in the hole every time. I was shoot, shoot, shoot. And I won so many tickets. That's an example of how like professional gamblers exploit an edge. You don't have to do that on the stock market. It's even better than that. However, you never know if one of these IPOs is going to become the greatest thing in 10 or 20 years. But you can do your best due diligence and have your best theory. And I love that nano nuclear energy, portable, mobile nuclear power reactors. Can you imagine? They've got it down to the size of a shipping container that can be put on a semi truck and brought to a concert venue or some major event or a small city, and it can power the whole thing cheaply and cleanly, and it lets off steam, and it's based off of non-radioactive elements. So it's a cleaner nuclear energy than the ones in the past, like for instance that they started with in the 40s, 50s, 60s, 70s. Uh, Now imagine they've got it down to that size, right? They're only with money, with sales, they're only going to be able to produce smaller scale ones, more energy efficient ones at better cost savings for people. And so I think they have a great future prospect. They were just at the nuclear conference and acquired some more talent to their team. Do your due diligence, but I think this is a great company. This is what it looks like from IPO. It hit as low as 325 a couple days after IPO, and including it IPO'd at $3. NNE, Nano Nuclear Energy, around $3. It is now hitting $14 today, and that's only a month and a half after IPO. Not that it's going to only go up from here and it's never going to see lower prices again. It just you just have to understand that when you see a chart, you understand behavior. So looking at this chart, yeah, it can go down and then base and then cup up and then break out and then push. and then go down and then base and then cup up and then break out and then push and then come down and then base and then cup out and then break out and then push again, perhaps. You have two instances so far. So we're 2 for 2. But if it does happen to break down below prior levels, I would personally, I would just cut it all, and then I'd be looking to reacquire at lower prices. And I can use my profits, taking a little bit, 10% here and there on big push days like today. I'm up 79%. What am I up right now? I'm up 83% on nano nuclear energy since my entry at $7. It's not even $3. I got in late, but I'm almost doubled my money already. But I can be taking some profits here and keep a core position that I can keep adding to, a core snowball, if you will, that I can keep adding to, and I can scrape off the top, and then I can use those scrapings off the top as insurance against it falling, and also to use as money to rebuy at lower prices, and just keep doing that snowball. And that's called trading around a core position. So, it's personally, I love the concept of the company. I don't know the owners. I haven't, been there. I haven't inspected the thing. But I'm pumped about the company and the concept and the vision. And it seems like it looks like it's legitimate. Do your due diligence. I'm still going to make money on it because, I know how to do that. I'm a trader. And I also invest, but trading is very important. You don't want to hold an investment to zero. You've got to know how to trade out. At what point can you trade out? It's good to be a trader. You could be an investor, but it's also good to be a trader. Investing is good, yes, but the best investing, the biggest gains in investing come from guessing right, picking right on young companies, young, less proven companies, and seeing their vision and that they're going to still be around in 40 years when they're fully mature. After 20 years, they've proven themselves well, but any company that's younger than 20 years is still kind of sketchy. You don't know. It could have its heyday and that was it, and now it's on the decline. It's hard to tell. After 20 years, it's gotten mature, but after 40 years, this is a staple. This is something that's going to stay around and has been run right. And now, moving forward, it just depends on the current situation, but it's made it that far. To pick those companies, that's even Warren Buffett got lucky. He said it himself. He got lucky on a couple of the early first few investments, and he had a pool of investment pool with friends. And using that, he helped make everybody millions. And he got lucky. He said he got lucky on those initial investments. But then from there, he was able to get a little more conservative, but go after more. And from there, with a little bit better risk management, he was able to compound. You just take a little bit of luck and a few $1,000,000 and compound it properly. If you just have that one initial event and then you compound it properly at a very low rate of compounding, a safe rate, 5%, 7% per year, then in 70 years, you're going to be a billionaire, multi-billionaire. Okay. So, but he started with a lot. He didn't start with $11,000. He started with millions, some millions, a limited amount of millions. And he admits that those initial forays were stupid, wildly stupid. He looks back and goes, my God, what did I do? And got lucky. He admits that he got lucky. So, and then from there, it's just been being good. From that point on, he just clamped down and then stayed a course and stayed nice and safe. He was using principles that he was taught on how to invest and find companies that could have potential, but they don't always all have that potential. And he got lucky. He said that. So now that he's a multi-billionaire, was he lucky? No, he also coupled it with a lot of skill. So, I mean, luck is great. You want the skill though. You can't get anywhere without the skill, but luck is great. If you're going to get luck, you get a little bit of luck on your side. That's great. But if all you have is skill, then that's, all you've got, and you're going to have to use your skill. But if all you have is luck, it's not going to last, is it? It's not. Am I trimming my NVIDIA holding? I've already trimmed it. I already got out a couple days ago, and I'm just going to be waiting for a pullback now. Great question. But it's extended and running. Usually these red gap ups, if by the end of the day this is red, usually that constitutes a reversal. So then it goes under pressure, and that'd be great because look, last time it did that was like back here, and then you got what? 3 days of consolidation. Look to prior behavior to understand some expectation. It went down for a couple of days and then you're back in. But that's all I need. I just needed to settle down a little bit for volume to drop a little bit, and then let's get back in. But I'm not going to get in on an extension because that's high risk, low reward. The probabilities on that are high risk, low reward. You don't want that. You want low risk, high reward. And you can get that in a pullback, cheat entry before breakout. If it has to be at breakout, for me, it would have to be dependent on if the base was shallow, if the consolidation was shallow, or if it was really wide and long lasting. I wouldn't want to be getting in so late off of a large move. I want a small move. I want a little tiny cheat entry in a consolidation. And then from there, let's see what happens. And if it happens, then yeah, I'm going to start to partial out as it moves up. I'm going to partial out as it moves up, but I'm not going to be getting in. Not going to get in. Just like Carl said this morning, the train has left the station. The boat has left the dock. Don't jump off the dock when you see the boat on the horizon. It's too late. Don't do it. But you're going to get eaten by sharks. You're not going to make it. The boat has left the docks. It's too late. But wait for it to come back and then get on. You have to wait. You missed it. You can't change that. It is what it is. No amount of emotional frustration is going to make it happen. Control yourself. Go back home. Work on your garden or some shit. And, check and see when the boat's back. Oh, the boat's back? Okay, great. I have my bags packed all ready to go. Let's go. Let's get on. Go buy your ticket, get on. Now you can go. But wait. Any books that I recommend? For sure. Absolutely read this one. I have tons of books back here, and can recommend them for various books for various reasons. But I'm just going to recommend one right now to get you highly started. And I don't know if it's backwards on the stream or if it's forward. It's called How to Make Money in Stocks by William O'Neill, the 4th edition. This is a guy that developed a system in 1969 and has made hundreds of millions of dollars. And people who follow him have made hundreds of millions of dollars on the market. And this is the updated version. So it's not a 1969 book. It was updated just several years ago. So it's very cutting edge, new stuff. This is outstanding. This is the technique we use that we're talking about on NVIDIA and how to get in on cheat entries and stuff like that. Actually, the cheat entry stuff is stuff that the disciples of his developed, namely this guy, Mark Minervini. And this book is Trade Like a Stock Market Wizard. You can buy this book, but there's really only one page in here that is excellent. The rest is, just kind of like understanding the mindset and just understanding things. But the thing with Edge is there's like one page in here. It's worth it though. How much is a book? $20, $30? Isn't it worth $30 to you? Yeah. I mean, and this one's like $16. So both of those are how to swing trade essentially. How to swing trade. It's a little bit, you should probably hang out with me because my techniques are even more cutting edge. I'm like 3rd generation, or at this point 4th generation of that system. It's been through 3 iterations of evolution, and the techniques I use are even more cutting edge. So those are the books. Yeah, there you go. Could I recommend one more, please? And I did. There you go, Braxton. Okay, guys, I'm going to take my first break on the day. Thanks for tuning in. See you back in the group. Remember, trade safe and trade smarter with me. All right. See you guys later. 25 years experience, you guys. Class tonight. That's right. Master class tonight for members. See you there. We'll be talking about some cool stuff. Thanks, Braxton. I know. But that's just probably because I don't market myself a lot. So I don't need to. But I probably should. I'll get there.